has gone on a 4-day strike to oppose the privatization or the proposed privatization of IDBI Bank. The government has brought down its stake in the bank even further. IDBI Bank today said that government insurer Life Insurance Corporation has increased its stake in the bank from 7.2% to over 14%. So it's a significant hike there by LIC. Now, this effectively brings down the government's holding in the bank. Ritu joins us now with more details. Ritu, where does this take the government's stake in IDBI Bank, and how much will the bank be able to raise through this deal?
Well, this is essentially the government making good on its promise of bringing down its holding in IDBI Bank to below 51% and privatizing the bank along the lines of Axis Bank. So today's development is that IDBI Bank has said that LIC has increased its stake in the bank from 7.2% to about 14.4%, which essentially means now, as a result of this preferential allotment of fresh issue of shares to the insurer, that is LIC, the government's holding in the bank, which was at about 80.2%, will fall to about 74% after this deal is done. Of course, now this essentially means that through this transaction, IDBI Bank will also be able to raise about 850 crore rupees through this preferential allotment. But remember, earlier, IDBI Bank had indicated that it did intend to raise about 1,500 crores through a preferential issue to LIC. But because, according to IRDA's formula, the LIC's stake in any company is capped at 15%. They are only able to raise about 850 crores through this deal. Yet a positive for the bank in terms of the capital it's been able to raise, which will aid its Tier 1 capital to meet the Basel III requirements, a lot of which was eroded in the last quarter because of provision for the AQR accounts as a result of RBI's inspection. And this will also be a positive in terms of the government's stake now falling significantly.
All right, Ritu, thanks very much. That's the latest there as far as IDBI Bank is concerned. The stock down by about 3.5%, but let's watch out for it tomorrow.